joined. Okay, so now going back to where said I'll start immediately. Don't have time to wait for anybody. Everybody wants to join again. So this is this. So now identify that this trend is bearish, is bullish. Sorry. This is bullish and is an uptrend. What are we looking for? We'll be looking for bullish for other blocks. So now remember what did I tell you? Other blocks are zones where you have the institutional traders keep certain limit orders. So mostly other blocks we use them from daily 4 hour, 1 hour, 30 minutes, 15 minutes, depending on the time frame, depending on how you're trading. I'll show you all of that later on while we're going because we are going to go in depth in this trading, and I would love to show you guys almost everything that you guys need to. I'll show you guys everything you guys need to know. So, now the other blocks, from what I said just like 30 to 10, 15 minutes ago, another block needs to be made up of what? Your bullish and bearish candle. So, what do we see here? This is a bullish market structure. Remember, mind you guys. What you see here, you see your bullish and bearish candle. So now remember what I told you, you need to find your other block. Now let me zoom in. You need to find your fair value gap, your FVG. So now where's your fair value gap here? Inside here. Where do you have your fair value gap? In that place where I marked that, you see that gap from here to there. And that's your fair value gap. So you can see with that other block is valid, right? So now that's what you go ahead and keep on marking. You keep on marking like this one over here. Where do we now have our fair value gap? From here to here is our fair value gap. Then do we have a bearish and bullish candle? Yes, we have a bearish and bullish candle. So that's it. So I remember I told you guys most times the bearish and bullish candle is mostly a bullish engulfing or bearish engulfing, any which one you can find. So here too, this is also another block for me. Let me check if it broke. Yeah, please can you mute your mic, please, if you're joining? I've muted her. All right. So this is this from here. This POI, this point here is another block. Why? Remember what I told you guys, you have a bearish and bullish candle. The bearish and bullish candle, what else do you look for? Your fair value gap. Look, if you look closely, you can see the fair value gap here. I don't know if you guys are seeing my screen, but let me zoom in. Let me try and zoom in. And let me mark it out first. So now you guys also see the reality of this thing. You see where market respects an other block. You see also where other blocks that failed. I remember I told you guys about once it's mitigated, once the other block has been mitigated, you cannot use it again. You see this gap? That gap, that's a fair value gap. So now you have this is a bearish and bullish candle. So that's a valid order block, a Bible stick order block. And not just seeing this bearish and bullish candle, going back up you have seen that it broke structure. This is the origin that broke this structure over here to the upside, right? So it's valid, but what the market do? Market did not respect it. It broke it. It failed, right? So now you can see most times market respects it, market doesn't respect it. Now, where did market come back to? And first of all, let me start by marking all the other blocks in this trend from the points where I marked out. So with everything I've showed you guys know how to market a bullish another block, even if it's bullish market or a bearish market, right? I'll give you guys. In fact, let me give the assignment now because if I say I want to later on because I'll be busy, I have other things to do. So now this is what's going to happen. Now you're going to go. You guys know currency pairs. You're going to go to four different currency pairs, right? Mark out bullish order blocks and go to mark up bullish order blocks on four currency pairs. Also mark up bearish order blocks on four currency pairs separate and send for me. You use your trading view. Then now, in respect to what I thought before, I told you guys support and resistance. You go to two currency pairs, mark out, give me each of them, give me five resistance in these two currency pairs, five supports in these two currency pairs, each of them 5, 5. Then going back to what I gave you, pick one currency pair of your choice and identify the trend of the markets on the 4 hour time frame. You go to the now listen on the 4 hour time frame, you go to a currency pair, one currency pair, identify the trend of the market, right? In one currency pair. Then you snap and send for me. Okay, not even send for me because my DM is bulk. Send it on the group chat. I'll see it on the group chat because I pinned the group chat. I'll see there. Then what again? How many have I given you? Then the last one is um I showed you guys market structure. Now you identify a bearish and a bullish market structure. Pick one currency pair or two currency pairs. Show me a bullish market structure on one currency pair. Then show me a bearish market structure on one currency pair. I'll add this to the as this rec did I record this? Okay, it's recording. So everything I just said now, I don't have it offhand. Something I just gave you guys now. So you guys will do that and send. So now let's start marking the other blocks that we have. So remember, once a market another block is mitigated, it's no more valid again. So now, in a sense, look at this. Let me explain. Thank God we are going to live chat so that you guys can understand why I drew like 15 minutes ago. So it's not just drawing it like that on this thing. Remember, so this what are we looking for? We have your fair value gap here. If you look closely, there's a fair value gap. I don't need to mark it out. Fair value gap there. Then there's a bearish and bullish candle. So you mark it out. Now, so what I've said, I marked at this point so that market can tap this zone and buy. This zone has already been mitigated. This other block now, this guy here has already been mitigated. How has it been mitigated? Look at closely. Market came over here. See this guy. See this guy here. This guy don't come tap. Came and tapped this other block. So already is mitigated. So once another block is mitigated, you don't mark it out again. So where's the next other block we have been marking out, which is this guy? You have a bearish and bullish candle. What do you have? You have a fair value gap here. Mark it out here. This is the next order block, bullish order block. Market tapped, bought, came back, market took it out. Next thing went back in, closed back in, continued the trend. So now, where's the next order block? This guy didn't break structure, but he came back down, created stop structures that still broke structure. So overall, this guy, you want to take this guy as your origin. Um, Sorry, hold on. This guy is not picking this stuff. You want to take this guy as your origin here. The market still broke structure, so you can still mark this guy out. You have a bearish and bullish candle, then you have a fair value gap above. Hope you guys are seeing what I'm doing and you understand what I'm doing. So now let's draw it. You can see now, see this other block, this block here. You have the Bible version, you have the bullish engulfing. Most times it's formed about by the bullish engulfing, most times it's not. So you have this guy here, bullish engulfing. So this guy is he's also the origin, he's the origin of this block of structure here. Even though most people would take this guy as the origin of that block of structure, which even in some cases after market broke structure, taking this guy as the origin, market still respected it. But now let me still mark out this guy. If look here closely, look at these points closely. What do we have? You have your bullish candle, you have your bearish candle. You have your fair value gap from here to here. You see that gap, the fair value gap. I showed you guys how to identify a fair value gap. So I won't go ahead and start doing that now, but just mark out as well. Obviously, markets respected as this guy broke structure to the upside. This is the origin that broke structure also to the upside. Two origins, this guy and this guy. Now, this first origin under was unmitigated. If you can see, there's nobody, no candle, nothing came to tap this zone. So it's unmitigated. So you can still draw it and keep if the trend is still bullish. Or the only time market will violate this other block also is when the trend has changed. You have seen a change of character over here, and market is now coming down, creating series of market start creating what series of lower lows, lower highs from the higher time frame. You know that this guy to violate this guy. Do you understand? Uh, okay. So now market tap the other block. You down buy. You buy, go, it went up, still bought, went up here, broke structure again to the upside, right? Have you seen how the other block works? Now look at this other block that was unmitigated. Market came back down here, tapped the other block and bought. So this is a bullish structure. So you expect market to tap your other block and do what? And go back up. Do you get me? So market did what it tapped, it went back up, broke structure, still broke structure to the upside. So now, what do we see here? We see our fair value gap. We see a bullish and bearish candle. What do? We mark it out. That's your other block. I remember why we marking our other blocks at the lower low. Why? Because this guy, this trend, the trend on this guy is bullish. So what are we doing? We're marking our other blocks from the higher low. This is your, if you want to go to the market structure I showed you guys, this will be what this is a series of market is creating a series of higher highs, higher lows. Um, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. You can see it, you can just clearly see it in the chart. So everything I showed you guys on while drawing, you see it on the live chart. So your ability to interpret all these informations, all this that data, because all of these are data, all these candles are data, things that happen in real time. So your ability to interpret all of this is what gives you an edge to understand the way the market is going to and how you can trade. So imagine taking a trade from here. Now, we won't just buy from that other block. There are certain entry criteria you need to know. This is how you enter the market. This is how you also exit the market. The criteria you need to have. So imagine holding the trade over here to here. This 1:9, taking the trade again from here. That is actually taking the trade from here. This 1:6. If you understand risk reward, you risk 1 to get 6. If you risk $10, getting $60 here. If you 1:9, if you risk 1 to get 9 back. So if you're risking $10, you're getting $90 back. All this are just simple. You get so now the next other block where we'll be finding out looking for another block. Here, this guy broke structure here. I'll mark him, but he failed. It's an other block that failed. So now, how do you avoid losses in other blocks that fails? How to avoid losses? That's why I said there are entry criteria which you need to know. You don't just enter because it is at an other block. You have to have an entry criteria whereby okay, it has reached your other block. There are things I need to see market do at that point at the other block before I can engage, risk my money there. Do you understand? So also here, market failed, right? Market failed here. So now, normally, those that have seen this, they will say, okay, this is break the structure design, break structure to the downside. What they will look for, they'll mark out this guy. This is the closest block here. Now, if you can see, this is a block counter. This is a counter of the actual trend. Do you understand? This is a counter of the actual trend. The market came back down. It came up, tap. Some people for sale, but me, I don't, for some reason, I don't like counter trend. So now, where's the next order block I'll mark? This guy looks like an order block, but the fair value gap here is not. Why would I not take this guy as an order block? Reasons, it hasn't broken structure to the outside. Remember, it has to break structure. Market has to break structure here. That's not an origin that broke structure to the upside. There's a bearish and bullish candle, but sometimes you also need the fair value gap, but there's no fair value gap here. Also, this guy hasn't even broken structure. So those two things with those two things in mind, I leave this guy. I won't mark it out. Where's the next point I'll mark? This guy. See, you have a series of bearish and bullish candles. Why did I mark this guy out? Now we have the fair value gap, a very huge fair value gap, and it has been unmitigated. And this is an origin that broke structure to the upside. In next class, I'll teach you guys chart patterns. This is like a chart pattern. You have your double bottom. You guys know about that. This is a chart pattern. Double bottom, then you buy, mark this out and buy. But mostly, I don't really trade chart patterns that much like that, but trade structures. But in next class, I'll teach you guys chart patterns. I think our next class should be when Friday or so. Do you understand? So this is the next other block. I think market should have respected this block somewhere. Somewhere. Should have respect. I talk am. Respect the block. So imagine you waited for market to come back to that block. It danced around, still came back. As it tapped that block, what happened? Check. And that's a key zone, a very high probability setup. It says that this block is what broke structure to the upside and also what formulated this double bottom. So come over here, imagine taking this trade and it holding it to the break structure to the upside. So now this is it breaking structure here. Overall break of structure here. Broke structure to the upside. So here you'll be having a mixing one is to this, you're having an arrow of 1 is 13, 1 is to 12. So if you reach $10 here, you'll be getting $120 back. So all these are simple. Where will be your next order block? This will be the next order because this is obviously that broke structure to the upside. But also remember I told you guys most times once it happens like this, you might also not see a fair value gap, but this guy broke structure to the upside. There are a series of bearish and bullish candles there. So your mark out from the last mark out from the last bearish candle based on looking for buys, drag it. Think potentially market had come back there. So that's just basically it. That's basically it for your other blocks, right? So now I've showed you guys how to validate another block, how where to mark out another block. So now that's why I started from trend, identifying market structure and all that. So with this, you can also mark out other blocks on your chart. So please, you guys will do the assignment I gave you and send it for me on the group chat. So I don't know if anyone has questions. I'm trying to make since our time is up, I want to make this quick as possible. But does anyone have questions based on what I've showed now? If you have questions, you can I mean to several ask. Any questions? Okay, that means I take it that everyone is understands what I just showed you guys. So this is recorded. I'll add this to the folder. My battery, I'm trying to rush it because my system is low. So I'll add this to the folder, the file folder, the other courses where the other videos are. So with this, I take it that everyone understands what another block is and how to validate another block, how to invalidate another block. Because if you know how to validate the criteria that make another block valid, when you don't see those criteria that makes that other block valid, that invalidates the point where you look at as an invalid other block. Do you understand me? Hope that English makes sense. So we are done for the night. Our next class, I think, yeah, chart pattern. I talked about chart patterns. So I'll show you guys chart patterns. That's very, very important before going deeper. Because from other blogs, I wanted to go to the liquidity. So I'll show you guys chart patterns. Then the upper class, I'll show you guys liquidity. From liquidity, we start the main thing. So good night, everyone. Have a very, very nice day and ensure you do your assignments. That's what will motivate me to continue the free class. If not, all on my jail. Please, whoever is drawing this thing should not draw this stuff on Joy. Please stop drawing this on. Let me end the call. So everyone, good night. Do your assignments, and I'll be expecting them on the group chat.